Warriors. How's everyone doing today? Yes, Steve, I know my mic is on. Thank you very much, my brother. I know you can see my Twitter feed. That's intentional. Of course you can, Steve. So everyone, true story, okay? Last night, you know, doing my favorite thing, laying on the couch, flipping through the channels, and all of a sudden the power went out. And it didn't go all off at once. It went off, and there were a few things still on, and then that went off. And being a very optimistic type of guy, hi Ronnie, Kareem, and Patrick, being the optimistic type of guy I am, I'm thinking that some adversary of America hacked the grid and shut down the grid. Great calls lately, Luca. All right, so, or North Korea set off a nuke about 50 miles above the atmosphere, and it created an EMP, an electromagnetic pulse, that would also fry the grid and anything electronic. So that's what I'm thinking when the power goes off. So after that, North Korea. So after that, you know, I went to sleep. You know, what can I do, right? If the end of Western civilization was here, I was going to get a good night's rest, right? So then my first alarm goes off at 3:30, and I go, God, the power is still off. So what can I do? You know, I really wanted to do today's show. A lot of the things that we talked about worked out. I'm looking forward to my interview today with Michael Storm. And, you know, we're broadcasting on investing.com. By the way, welcome viewers at investing.com. But then, so I went back to sleep. I go, what can I do? You know, I don't have a cell phone. I can't even let Blake know what's going on. And then when my second alarm went off, the power came back on at 4. So I go, great. You know, this show is meant to be, so it's going to be a very special show because, you know, it almost didn't happen for me. Now, the great thing is, if something, I can't make it, God, do I have a great team behind me. And everyone has gone and taken their summer vacation, and, you know, ForexAnalytix does not miss a beat. All right, let's get to the markets now. So everyone knows I've been tweeting Norm Winsky's. Yesterday I talked about Norm Winsky's interview from last week. He had the 18th for a turning point in the S&P. And I thought this was typical sentiment at the time. So I get a reaction from a guy who's pretty good. He trades a fund. And he says to me, now we turn to astrology to forecast when the SPX goes down. What's next? To do the dance of the rain? LOL. Nothing can stop markets. Huge momentum. My reply was, LOL, buddy. I laughed so hard I knocked over my pyramid with my tinfoil hat. Yeah, I knocked over my pyramid with my tinfoil hat. Anyway, now let's look at some price action. So you guys glad my power came back on? All right. So I have to tip my hat and congratulate Steve, as I know he's going to say it's premature, I'm still in the trade, but you know, he took a lot of heat, and I know how much Steve respects Greg Horvat's work, and for great reasons, very good reasons, to listen to Greg Horvat. And Greg, you know, he wasn't looking for this, and Steve said, you know what, I'm just going to follow my intuition. There's something weird about the way it's trading. And now look, one candle could change the whole thing. I know it's short term, but it's a nice break. And this is something I teach. and it's off the weekly, so I'll give it away. I'll give my teachings away. It's what's called a 2-week off number. You go back 2 weeks and you look at the close of the weekly candle, which was 25, 46, and 90. Okay, so that's what the S&Ps have to do to post a 2-week reversal, is to close under that number, 25, 46, 90, call it 25, 47, right? So these off numbers at time come into play, and you can trade against them, right? So if you were short going into what happened here, look at the low. 25, 44, 40. So basically took out the off number by a handle or so, but this is going to be the important level by tomorrow, in my view. To get a 2-week reversal would be a pretty powerful signal. Now, right now, it looks like we could get some ABC, and, you know, the S&Ps being the S&Ps, we could be at new highs and clean out the stops here. I don't consider that a high probability event. I think that we'll retrace this break, and then we'll see. But anyone who listened to Steve or took Norm's signal on the 18th has big money made. They should be booking half. They should have a profit stop in on the short side of S&Ps. Everyone with me? Give me a Y if you understand that. You should have no pressure on. You're welcome, Forex Gal. Good, Anthony. All right, so I think we have a pretty full house. I could cover a couple other things, but I know there's a lot to say. Blake has a lot to say. I just wanted to cover this. Nice, you were short the DAX. Nice trading, Kareem. Way to go. And the dollar, we had a 2 driver. Someone tweeted me, could we have a 3? I don't know. I don't think so. I think we're on our way to challenge it. You know, a lot of Elliotticians are looking for one more low in the dollar index, so we should know pretty soon if we're going to end up putting in a right shoulder or we end up not putting in a right shoulder. So anyway, yesterday I said we could have a decent little sell-off to fill out one more time, maybe get ABC. You know, I think 92.50 is important, but the moving average is right here at 92.90. You're going to get more selling under this low, but it could just be this and be deep without making a new low. But I know Greg is looking for new highs in the euro. Nick is looking for new highs in the euro. And I just want to show you guys that this, our YouTube page, if you want to learn how to trade, and this is free too, call us humanitarians. Maybe ForexAnalytix is going to win the Nobel Peace Prize for humanitarianism. But every webinar that we do is recorded. Every interview is recorded. And what's nice about having a recording is that you go through the session and there's something you don't understand clearly, you can stop it. You could rewind it. You could go over it. There are many lessons, many pearls in over 6 months of these. So, you know, this is a FX primer top level, okay? And the last thing I want to cover, of course, is that I think everyone needs the traffic light page. Okay, the traffic light page, as you can see, updates are being pushed out. Hear the clicking, you get it. Any instrument, we cover quite a few. Then when you get this is not all the instruments we cover. You just scroll down and you'll see how many we cover. More than enough to keep anyone busy. I know it keeps our team busy, updating the analysis 15, 18 hours a day. And then when there's a lot of confluence and conviction, you start to get the active patterns in play. Okay. Nice by Grega. Yeah. Lakers up on pound Kiwi. Nice call, Blaker. So you can do all this, my trading warrior brothers and sisters. At least, you know, when you go to buy a car, you take a test drive. Test drive ForexAnalytix for $1. And I know you guys think I'm joking, but if you're unsatisfied spending 10 cents a day for, I think, some of the best analysis on the net. Before I joined the team, I interviewed almost everyone on the team and used to think to myself, man, it would be great to work with these guys. So, you know what? Have a vision, see it, plant the seed, and you'd be surprised how many of them manifest. So with all that being said, and without further ado, I'd like to turn it over to someone I admired when I interviewed on FX Street, and learned a lot from his calls, just like the interviews that we do here in Knowledge Base. And he edified the LAR community, the log analysis room on FX Street. Mr. Blake Morrow, how are you today, buddy?
Wow, what an intro.
Yeah, and I'm glad there wasn't an EMP, or, you know,
yeah, you're like, I'm going to go to sleep right here on my couch, and I'm going to enjoy every moment of it. As it's happening. So
yeah.
Did you have like rolling blackouts or something, or what happened over there?
It wasn't rolling. It wasn't rolling, and it's I think all summer it didn't happen. So I thought it was strange. You know, it wasn't a real hot day. That's normally when the grid is under pressure, and it was at night, and the way the power went off was like a little at a time instead of like that. And yeah. I said, well, what can I do about it? I'll go to sleep. Even if there was an EMP, what can I do about it? I'm tired. So, yeah, and then, you know, I got a little anxious when I woke up at 3:30 and I still didn't have power. So I didn't know what to do. So I went back.
You know what I don't want you to ever do, Dale? Whatever you do never, ever watch the show The Walking Dead, because I don't know if you'll survive.
Yeah, I don't like zombies.
No, I mean,
I used to be one.
You'd freak out. I think you'd come under some serious like stress, anxiety, pressure about like the world is ending. Anyway, hey, it's been a real busy day already. A lot of most of it's New Zealand related, and there's some pound related too. But let's talk about, first of all, the euro dollar, and I'm just going to talk about the euro because, you know, the market is, I suspect, and that the retail market is pretty bearish. The euro, you know, we have this big, you know, possible head and shoulder pattern. If I had to say, is the most talked about chart pattern at the moment is in the currency market is the possible head and shoulder pattern in the euro, the inverted head and shoulder pattern, excuse me, in the dollar index. You know, this is like the most, you know, this is what everybody's looking at, and everybody's leaning on, you know, buying the dollar, and the dollar has been really weak the last few days. I mean, you look at the last, you know, 2 days, we made this false breakout at the 618, we've reversed, and this is and as if you look on ForexAnalytix, you know, you look at the dollar yesterday. Where's my dollar index? I'll pull it up. Here it is, just in a second, as soon as I get to it. Where is, oh, there it is. Okay, so you get to the dollar index. You know, the 4-hour chart that we posted yesterday, you know, we were up here, and you can see the circle, and now we're, you know, further down. That analysis yesterday was DXY had major rejection again at the 618 after hitting a new trend high. The key will be the test of the trend line, the circle, if we can bounce or not from there. A lot of traders are long US dollars at the moment, and the dollar has been sliding as we approach this, you know, pretty key support. I don't think there's many traders that believe the euro dollar is going above 120, 121 again, not anytime in the near future. I think most traders are looking at, a move back into the teens. And I'm not 100% convinced about that yet.
Like Mark Newton was on, and I know you respect his word. Yeah, he was on CNBC 2 days ago.
Yeah, I saw that.
Exactly. Oh, you saw it? Okay.
Yeah. No, but you can say it. Yeah, he was talking exactly that, right?
Right.
Everybody's looking for the dollar to strengthen. And I'm not in that camp. I think, I'm not necessarily out of that camp either. I just don't necessarily, I'm not convinced yet. And I do, and I'm.
You're not camping.
No.
You're not camping yet, buddy.
No, but I'm always in the mindset that the market will induce the most amount of pain as possible. And if the market is really preparing for some dollar strength, I don't know if that dollar strength is going to come. Now, we are going to be announcing a new Fed governor, or Donald Trump said within days. Well, Sarah Huckabee Sanders, I believe is her name. She mentioned yesterday, within a couple of days, we will know who the new Fed governor is going to be. And I'll tell you, there's a risk that the dollar doesn't perform. Unless there's if the selection of the new Fed governor, or let's just say it continues to be Janet Yellen, the dollar is going to slide, and that would be pretty, pretty crazy. I mean, the dollar could really move here. So before you get too bullish or bearish the dollar, I think you've got to let the dollar prove itself. And so with that being said, it's real simple to me. I mean, we have to break this here. I'll make it into, let's make it into a, so the dollar really has to break out of this square, really. And that's the euro. It's either going to break higher or lower. And I'm not going to get too excited, if you will, about the dollar until we break out of here. And I'll tell you, I have no qualms about buying the euro either. And I know a lot of you might go, wow, so you would be short the dollar. I don't mind being short the dollar. If I feel everybody's positioned long the dollar and the dollar starts to break down, I'll sell it, which I think is the case. But also at the same time, if we do break the neckline here, then it is a head and shoulder pattern, and it's going to play out. We still have some time to develop from a symmetry standpoint. I think we can build this out for a couple more days, or I would say within the next week we're going to understand what the dollar is going to do. So before you get too bullish or bearish, just think about those things. Now, the big news overnight is New Zealand has formed a coalition, and we have a new prime minister, Miss Ardern, and she is 37 years old. She's the youngest, third female prime minister, I think is what I read, and the youngest in 150 years. But they are very anti-capitalism, I guess is the way to look at it. And the negative response of the Kiwi dollar since this announcement has been, as you can see, the New Zealand dollar has dropped from 71.58 all the way down to 70.15, and but you should see the bigger moves that have happened in, like, the Aussie New Zealand's up 243 pips right now. And by the way, just so you guys all know, the Aussie New Zealand is breaking. Yeah, this is a triangle breakout. Now, the reason why this is such a big deal is because it's a 38% retracement only. So that means this continuation higher should be fairly good. I bought it this morning about 30 pips ago. I think dips now in the Aussie New Zealand are probably going to be bought, and I know I'm going to be buying some more on a dip.
It's a big formation, buddy.
Yeah, it is.
It's like, what is it, like 20 cents?
Well, this right here, it could play out a few different ways, but this move right here should take us to about 116, somewhere up in this neighborhood.
I think it'll be 120 handle.
Yeah, and then you know, I mean, if we start extending like the full length of this wedge, I mean, we could be up here. So I mean, there's a lot of room. I guess what I want to point out is there's a lot of room for gains, and that's why. And somebody in our chat room, and here, guys, you can say hi in the chat room. No naked women, please.
You know what, Blake? Most people would think they're late, and you know what? It's just beginning.
Well, that's the thing. This is an event-driven, and hold on. Hi, guys. You are on Jumbotron. Yeah. So
someone has it.
When somebody in our chat room, and I can't remember who it was, just when I think it was Simon who had mentioned it, he goes, "Hey Blake, we don't chase, remember?" And I'm like, when it's event driven, I will chase, because this is the New Zealand. It's a catalyst, right? There's a catalyst why the New Zealand is moving lower, and it's a big one. This is 8 years. And then we're having regime change, and we're having anti-capitalism, anti-strong New Zealand movements. That's thanks, Matt. Go home, Kiwi. You're drunk. That's good. That's really good. Anyway, I better get this off of the screen. Funny stuff. Anyway, so yeah, you got it. So when you have a big move like this is a big, like I said, this is a catalyst move. So we're seeing big moves in the Aussie New Zealand. You can see let's go over to the Euro New Zealand. The Euro New Zealand's up 373 pips right now, and going. And you know, we have a 618 retracement that comes in, and it comes in, you know, about 170. We're at 168. We could make it up there. I mean, but longer term, I mean, you got you know, some potential here of further gains. I mean, if you look where we've come from, you know, this Euro New Zealand could very easily be trading up at 180. Now here's the Pound New Zealand. The Pound New Zealand has a major cup and handle pattern developing that can take us, you know, to 195, 196. And I'll have to tell you, the pound was a little weaker today because of the retail sales, but that hasn't stopped the Pound New Zealand. And we have a, you know, big cup and handle pattern breakout, which, you know, we get above 189, and it's, you know, we're gone. I mean, we break above this, you know, 189. 189.60. I mean, it's gonna be, you know, and this currency pair, yeah, it is up 300 pips for the day. But I tweeted something that some people probably don't recall, is the Pound New Zealand. For those of you that don't know, I mean, this currency pair can move. Like here's a day where we went from 215 to 222. That's a 700 pip gain in a day. It went from 223 to 227. That's a 400 pip gain, and consecutively too. I mean, here's another one, 206 to 212. That's a 600 pip gain. The Pound New Zealand is a monster when it starts to move, and this is a catalyst that could drive this type of breakout in the Pound New Zealand. And I'm not saying it's going to. I'm hoping it's going to, because I am long. But we could very easily, you know, be trading up here within 2 weeks. You know, we could be, you know, another 1,200 pips higher, or, you know, from here 88 to 90, 96. This is 800 pips higher, but we could actually make it up to 2. Not too big of an issue. And if you look at like some of the other New Zealand pairs, like here's the New Zealand yen. The New Zealand yen is threatening a pretty big trendline breakdown. We're on it right now. I mean, you know, this New Zealand yen, we could trade down to 75 yen. You know, so you can see the Kiwis breaking everywhere, and that to me is a big cue to, you know, be you know, long or short Kiwi dollars, and I mean, we're seeing breaks across the board. It's not just in one currency, and that's what I like to see whenever I'm trading. Is I like to see the, you know, the breaks all the way around, and right now we are seeing that. So the New Zealand dollar is a very big deal, and that's why I'm actually shorting some Kiwis. So by the end of the day, if the Aussie New Zealand is trading above this 112, I'll issue another pattern in play, just so everybody knows. I'll probably issue another pattern in play for a long Aussie New Zealand, and I will have targets that are much higher than where we're at right now. So you know, anyway, that's what's happening right now. Now, you talked also about the S&P, and the S&P is did that throw over, you know, where we went above the ascending wedge, and then we rolled over. So now,
exactly what we talked about yesterday.
But you know, this market is very well prepared for buy the dip. So we might get a rally back to, you know, 25.55 up here before rolling over. That's how I would see it. If I have to imagine what happens today, is we bounce a little bit at the open and then roll over. And you know, it is the 30-year day anniversary of
the 87 crash. Where were you?
Where was I? I was in high school, actually. I was in high school. I know, I'm just a young kid, yeah.
You know, so I was already in the business, and I went down the elevator to my bank to make sure it was still open.
Oh, wow. No kidding.
And people are looking at me, and I go, I was looking around, everything okay? Yeah, Dale, you know, why? What's wrong? I said, oh, we're just having the market's down 30%. Oh, well, everything's okay here. I said, oh, okay. Again, I was going to run and pull all my cash out, but it was like it wasn't even a financial event. It was a market event.
Yeah, it was a market event, and you know what? Here's the thing. I don't know if that really means anything. It has a few people obviously talking about it, but I'm not a big, you know, history repeats itself on this exact day. I'm not one of those people. So anniversaries don't mean a whole lot to me. I think price action, like the price action of the crash of 87, can happen again. I believe that. I don't think it necessarily has to come on a certain day, or because the lunar moons are, you know, aligned, or, you know, I don't believe that, but I do believe that price action repeats itself. And history will repeat itself.
We do have to say, though, you know, Norm's not always right, but that was a pretty good call.
Oh yeah, you know, I mean, and the markets do, you know, in all fairness, it's due for a little bit of a pullback, and we might only get a 0.1% pullback today. So you know, and that might be it. The one thing that I have to point out before this news is released, we have obviously we have some news that's happening right now, just with Billy Fed and weekly unemployment claims, is bonds bounced from support, and bonds really looked weak yesterday, but you can see this. Here's a daily candle thus far, which obviously can change here in a few minutes. But you know, we've seen a reversal of the of the bond market, and if you go into yesterday, I mean, it looked pretty bearish. It looked like we might break, and then obviously we did a U-turn this morning. So you know, if bonds bounce, yields are going to drop, and you know, that's weighing on all the yen pairs. We have the dollar yen that is reverse course after, you know, making a stab towards the highs. The bond market and the yen pairs are pretty much in sync. So here's your we have some data coming out right now, so just stand by. Weekly unemployment claims and Philly Fed. See what this dollar yen does. Okay, Jobless claims continue to drop. There's like no everybody's working apparently. It's 222,000, so that's a good number. Let's see, Philly Fed, it comes in at prices paid came in stronger, so that's inflationary.
It looks so good, actually.
Yeah, actually all the Philly Fed data came in really strong, 27.9 plus to 22. So yeah, good numbers for Philly Fed. So the dollar is getting a little bit of a bounce right now. Inflationary, strong data, continues to support the dollar. But as you can see, the dollar yen, I don't know how much bounce it's going to get here. I mean, I would be.
That was weak.
Yeah, it's been a weak bounce thus far, yeah, and so that's just.
I love Philadelphia cream cheese. I don't know about the Philly Fed, but I know, corny.
That's some bad, very bad. Are you from the Midwest? Because your dry humor is really, something.
Yeah.
Oh, look at the dollar yen's actually showing a bit of a reversal right now. Yeah, so overall, the data is pretty strong here. And with that being said, I like I said, I really wanted to cover the Kiwi, and that's that. I'm going to leave the rest to Steve and Stelios and Nick. I know Nick is coming in, and so I'm going to pass it over to you guys because I don't want to be the hey Nick. And
Hey Nick.
How's it going, guys?
Hey, all right, thanks. I missed your Kiwi. Are you really bearish the Kiwi?
Oh God, yeah. I mean, look at the moves. I mean, it just we got the Kiwi yen that's right on support right now, but the Aussie New Zealand has broken out. And this is really, as I was telling everybody earlier, this is trend changing stuff. I bought the Aussie New Zealand and believe me, I'm really.
That's a major breakout above fib resistance for me as well. Like big.
It is.
Yeah, this is a big swing breakout, but the Kiwi dollar is an ABC measured move right here, 7,000.
Yeah, you're talking about this measured move right here, and this is yeah. So can it continue to break? I mean, that's the question. But the point that I was making earlier this morning is that this is trend changing potentially for the Kiwi. You have a government that is stepping in that is really anti-capitalism, period. So this is going to be and should be New Zealand bearish moving forward. So that's why I'm looking at everything that's happening right now. And I'm like, okay, well, I will probably stay short Kiwi for at least the next couple of weeks, realistically. So anyway, but I'm not going to steal your thunder, Nick. I'm going to pass it over to you.
I don't know.
And, well, if you have any charts that you want to show, and then Steve's here, I got to let him speak, and then Stelios, and then we have a guest. So, guys, I'm going to be listening in. So, Nick, I passed you the charts.
Okay, cool.
Hi, Nick.
Hi, everybody.
Hello, Nick. Welcome.
What can you see? Anything?
No. Yep, your trading charts are loading.
Oh, we're on the right page. Good. Okay. Everything is a bit. I've been having internet issues. I'm sorry. I'm a little bit slow today. So, yeah, I am looking at the measure move in the Kiwi simply because all of the other dollar pairs, the dollar is pretty weak, and so I wouldn't be surprised if the Kiwi dollar played catch up here. But the one I'm watching, for me, the key, my canary in the coal mine, if you like, if I can load it up, is always the dollar Canadian. And the dollar Canadian sitting on this really level. If I zoom right out, it's the low, from April of 2016. This is this pivot level here at 24.61. This is what we're sitting on, and these daily moving averages. So unless they break, I don't really see if the dollar. So that if they go higher, then I think that everything else will follow. So I'm using like the Canadian as my guide, and a close below 1.246 for me would be bearish for the US dollar, and then I think we see continued dollar weakness. But otherwise, I think the others are all sort of sideways in the consolidation, aren't they? The Aussie, the euro still, you know, although we've got pretty good support today. I wouldn't be surprised if we saw another leg lower in this one. This is why I've been drawing on it, sorry. But yeah, so this measured move, I'm watching for a bullish reversal here in the Kiwi or a breakdown. And if it breaks down, I'd like to see a breakdown and retest before I sell it. So I definitely agree with you about the Aussie Swiss. The one I'm looking at really interesting today was Euro Swiss, if I can find that one quickly for you. I had it right here a minute ago, and then everything's, here we go. Gosh, I should have.
Was there, Nick, at the last screen, the one that says use this R on top?
Oh, great, thank you.
The right tab below, yeah, second chart on the low.
Okay, because I'm struggling to breathe. Thanks. I was panicking. I was like, oh no, I had it here.
All good.
So, yeah, cool. Hold on a second. I really have had some issues today with internet, sorry. Let's take these moving averages off and tidy up, and then I'll show you what I mean. Come on, let's go. Here we go. Okay. It has let me change time frame, but trying one more time, and then I'm going to give up. Here we go. Okay. So we've been stalled at the 1.618 of this corrective swing, but if I measure the moves from here, from this high to this low to here, I think that my first target is a 1.618, and the 2.618 is a swing around 121. So 121 is what I've been looking for quite a while. If I measure from this swing here, which I think is more likely, so this first sharp rally, we've been stalled at the 61.8 of this rally, and I think if we get above it and close above this, that we actually go much higher. We go to these prior highs and the 1.24 level. So I've got sort of two levels I'm looking for in an upside breakout in this Euro Swiss, 1.21, and then this measured move from this first swing to 1.243. So I am watching this Euro Swiss pretty carefully. It's just going sideways at the moment, but it's not in any mood to fall back. And I think that if we see a higher close than this prior high and a higher close, a close above 1.16, which is that 0.618 fib level, then I think Euro Swiss is going to be a really nice long swing, long-term swing long. So I'm looking at Euro Swiss as well as this the Aussie Kiwi. And in terms of fibs, the Aussie Kiwi for me is a bit of a similar setup. So let's put this up here. I agree with Blake, but I'm watching the close quite carefully. Let's get rid of this. So again, if I measure the moves, the ABCD target is 1.18 in the Aussie Kiwi, but only if we close above this 61.8 level, which is here at 1.114. So at the moment we're trading above it. If we close the day and the week above it, I think that it's game on for this target and looks really good. What I really like about this is the break above the weekly 200 moving average and the comeback, find support and keep going, because this, you know, the 200 week moving average has been resistance all the way down, you know, for a couple of years. So above it and then finding support and going higher is a big deal in this Aussie Kiwi. It looks really good. So yeah, I like it at all. And I think that we'll be able to buy dips against this 1.114 level as well if we can close above it. So that's why I like the Aussie Kiwi. And the CAD yen and the yen pairs, the yens have all been quite mixed for me, and I agree about dollar yen at resistance. But if dollar yen, if the stocks do go higher again and dollar yen goes higher again, then here's a weekly and a daily of this Canadian yen, and we've had this inverted head and shoulders pattern. We've broken out, come back, and again found some support. So if we can continue higher and break this 50% retrace, it's a 50% retrace from the 2014 highs to the end of 2016 lows, This is the 50% where we've been sideways really for a month. But I think a close above 90.70 for me, I think that this one keeps going at least to the ABC measure move, which is 94.40 and potentially 103. So that's why, just because as well of this bottoming pattern in Canadian yen. So I think this one's quite exciting too. But it'll only work if dollar yen keeps going. Otherwise, we can take away this neckline. That wasn't what it was, and it was just 50% and then a turn lower. So that's what I'm looking at in Canadian yen. I think that one's quite exciting. So I'm pretty ambivalent on dollar yen. I think it could go either way. You know, it's just a big deal level. We spent a month trying to get above it. I know where if we do get above it, I think we go to 117, and if we go below it, then we go to 105. But until, you know, until we decide, so 112, so 113 is resistance for me, and then the daily 200 moving average and 111.70 is the support, and 111.70 is a massive deal. So let's take a look at this on the monthly. Why this is such an important level. I'm going to zoom in here, or zoom out if you like. And this line here is this 111.70 highs, lows. This is monthly lows, 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 highs. Here, you know, 1, 2, 3, 4, 5, 6, 7 months, and then support and support. So a big deal from way back, this level for me. So from back, you know, 1994, it's been a level. So 111.70 is the support, and that's why. So yeah, that's pretty much all I've got for today. I'm pretty much.
Nick, I was gonna ask, you know, how about, you know, you were just talking about the yen, and I mean the reversal in bonds overnight was.
Yeah.
I mean, every you know, the bond market looked like it was just going to take out the lows. If you look at the 10 or the 30-year, and then we just turn around and reverse. I mean, what is that all about? You know,
Nick liked the bonds last time she was on, and we didn't make new lows.
Well, I liked the bounce, and I thought, you know, like if I look at the bund, this, you know, wedge consolidate, the bund has been so tricky in a wedge, flat moving averages, fib levels, you know, getting ignored in the bund at least. I really find I'm a bit edgeless, to be honest, but for me, we've hit resistance, and so unless we close above yesterday's high, where we dropped from, I think the path of least resistance is lower in bunds, I have to say. But if I look at the 10-year, I find that actually the 30 has been a bit easier to read lately, but you know, I'm going to zoom out because the hourly isn't showing it well enough. Hold on. I think what we're seeing is a bit of a fight over this. There's a big mirror trend line support. So if you run this, you've got 3 touches on the upside, and I've basically projected it from this low. So I hope you can see that okay. I'll put it down here.
Yeah.
Let's go up to the daily. You can see it a bit better. So it's not a trend line, it's a mirror trend line. So by that, I mean, it's just a mirror of this parallel to this upper trend line. In TradingView, if you just right click it, you can click clone. Then I put it on this low. And so this is where I expect there to be a bit of trouble. And that's what we've seen. You know, we've seen sideways horse trading over it. I'm not sure the market and these low wants to break these lows and properly break down yet. And so I think that's why it's been difficult. I think it'll end up as a wedge, and we'll probably see it break down. But yeah, this move has been completely crazy. And gold, you know, even crazier, because gold I just about given up on, and that's gone and done the same thing. So yeah, they're all doing the same thing. Gold, bonds, and the yen are all very correlated.
It's crazy. I'm kind of scratching my head at, you know, especially the moves in the yen and bonds yesterday, and gold even yesterday. I mean, gold hit the 618, but you know, like all the yen pairs just spiking higher. It stopped me out. I mean, I got stopped out on 2 different trades yesterday, personally, yeah. And here they are back below.
I have to say that I'm feeling a little bit fakey, but I've got that. Lately the US trading session has been king, and the moves in the European have very often been reversed at the US Open. And the bigger the moves in the European trading, the bigger the reversal. And so I would not be surprised at all today if this all gets reversed. So the rally in gold and the rally in bonds gets reversed. So I'm ambivalent. This is one of those days when I think I might be a spectator and wait and see where we close. So.
Yeah.
Before you go, Nick, is it possible to get your view on Bitcoin? I know Greg is looking for maybe one more push up, and
I'm looking for
I've been
push up.
I've been showing the weekly. Looks like it could be a 3 driver on the weekly chart. So curious.
Yeah, I'm not quite sure if I've got it right here, but I will get it for you right now. I am looking for one. I'm looking for 6,200. I think I'm looking for the same sort of 1.618 extension that Greg is looking for. And then I see potential for maybe a bigger correction than people are expecting. So
yeah, I think he thinks that's the end of 3, and 4s could be pretty deep.
Yeah, he counts them. I'm just saying that we're approaching like kind of one of those fib clusters where we could keep going high. Yesterday people were very bearish. People were sure that was the high was in yesterday, and as soon as you see sentiment like that, you just know that it's going to keep going higher. For me, though, I look at the swings and the fib retracements, and it's not reversed until you close below the 23.6. So that was the daily. It didn't close below on the 4-hour either, or that had a look. And so as long as we stay above that level, which was 52.27 yesterday on a close basis, I was always looking higher. But yeah.
How's the weekly?
Sorry?
How does the weekly look to you?
It's super, but this weekly looks, if we closed here, this would be like one of those hanging man, wouldn't it? And I have to say that as a bearish candle, I'm not a fan of these candles. I think it's more like an inside week and a strong uptrend. And I'm still thinking that we go that little bit higher. So I'm not in the bear camp yet. I'm still looking higher, 62. But I think we're close.
Pin bars are not good reversal candles, Nick. I mean, statistics have proven that.
Yeah. Yeah, no, I don't know. It's not over till it's over. So although I think that we could reverse at 6,200, I think if we go through it, then we'll see 7,000 in a heartbeat. This market really likes round numbers, big round numbers. I think that big traders are using them for profit taking. And they don't really understand technicals. So big round numbers are very, very important in Bitcoin. And so that's what we're going to see. This was a pullback to 3,000 after topping out at 5,000. And this high was 3,000. And then, we pull back to so they're all kind of round number stuff going on. So 6,000, we haven't quite tagged yet. But if we blast up more than 6,200, which I've got as a fib, then yeah, 7,000 for sure. So not very technical, scientific, but that's what seems to be going on. So I find Ethereum, though, and I know a lot of people, Ethereum is much more less bullish. We had a double top, and then we are in the middle of a big wedge consolidation. And so I think that the path, if we break these prior lows here, that we are likely to come back to this trend line support and maybe 250, 260 next, which would be the 61.8. I'll just put this in. I've got it missing here. 260 is the 61.8, but they're really messy levels. Sometimes it extends beyond that. So I think these prior lows are maybe 250, more likely. Nothing exciting going on there. But later, I think it will. So that's how I'm seeing those at the moment. I think Litecoin is a very interesting candidate instead of Bitcoin for people who like it. It seems to be outperforming. It's holding up pretty well as well. I think that this is setting up for another swing higher. So I'm liking the looks in Litecoin at the moment. If we can, if we see one more push higher, I think Litecoin will have some legs as well. So
Thank you, Nick.
when I look at the daily here, back to this 30, we're in the 61.8, 38.2 sort of golden ratio zone. This is the decline in Litecoin. This is the 61.8. This is the 38.2. I think if we get back above the 50, which is at 63 US dollar, then we'll see one more leg higher equal to this first one or a fib of it. So something like this. Let's mark this. So here's to the pullback. So 76 or then potentially a retest of the highs. 76.50 would be 61.8 of the first rally. So Litecoin, I think, is one to put on your list to watch. So
Does it have less calories than Bitcoin?
less calories. But more fat.
Again,
Less
very
sugar, more
bad,
fat.
very bad, very bad job.
Blake,
Oh my God, you're just full of them, Dale.
Quite funny. The guy that runs Litecoin, the inventor or whatever.
I mean, I drink light beer, don't you, Blake? If not, you ought to consider it.
Oh my God. Okay. Anyway, well, actually, you know what? Nick was actually just going to provide a very valuable piece of information about Litecoin. Go ahead, Nick.
No, I was just going to say the problem with Litecoin is the guy behind it, because he goes on YouTube all the time and talks about how much he likes Bitcoin, and he really should be talking about how much he likes Litecoin, which is his. So that's all I was going to say about it.
I'm pretty sure that in some not so far distant date in the past, we're going to be talking about the vast majority of the cryptocurrencies and having a laugh about people putting their money in there. I do believe that the idea of cryptocurrencies is going to survive, but I do believe that the vast majority of these attempts is going to completely fail, and a couple of them, the better established, etc., are going to survive, and everybody else is going to completely lose the money. After first, the vast majority of the crowd, which you very politely described as people that don't understand technicals and they just look at the round numbers. Yeah. So I think that's my personal summation about what's going to happen with this market sooner or later is that.
Ash is asking about WTI, Nick, if you have time for one more look.
Yeah, I'm a
You're one
little
of the best.
bit.
You're one of the best I know in the crude.
You know, I've been staying out of it, and I've been staying out of it for a reason, because for me, we're really close to resistance, and we're sort of at the 886 of this decline. So this was the resistance I was looking at. 52.60 for me was long term. So I'm looking at a 4-hour chart of WTI continuous, and so this what we tagged the resistance level that we're looking for, and I thought that we would go lower from here. We had kind of 5 waves down, so I was a bit but this rally for me has been an ABC, and so I'm look at this bearish move today that we've just seen. We've had a just gonna line it up properly. I was expecting,
cool, Nick,
it looks like it's
Blake had a long-term downtrend there too, right?
Yeah, so 52.44 was, I had a sell order at 52.44 and it didn't quite reach it, which is really annoying when that happens. So the levels got front run a bit and we've rolled over. But either way, this is an ABC correction. So I think if we head lower from here, I'm going to keep my bear suit on. And I think that we come back to this trend line with this support here and see what happens there. I can still see 40. I still see room for a move back to 40, and so in WTI. So
that would be a big move. Big move.
Yeah, that's a 20% down from here. So,
yeah, it'd be huge.
Okay, yeah, well, we probably won't go there.
Did you have any charts you wanted to show before our
No,
next?
No, that was all. To be honest, the Euro Swiss, I think, if depending on how we close, if we close where we are, the Euro Swiss is really interesting to buy on pullbacks. The Aussie Kiwi is really interesting to buy on pullbacks. The CAD yen and the dollar yen are really interesting if we can break this resistance long, because the Euro yen looks really good long. Those are what I'm mostly looking at. Yeah. So stock indexes, until we do a bit more of a reversal, I'm just kind of not looking at them. I'm looking at the bonds more than stocks, really. The stocks are just going to go up.
It's hard to hang your hat on any type of, even intraday, like any type of reversal you see at this time of the day. You just know it's going to get gobbled up first thing in the morning. So
everyone's in the pool, so let's see how far it goes.
Yeah, right. That's right. Now, come on in. The water's warm. Steve, did you have any charts you wanted to show?
I have plenty, but I think Stelios wants to say something about the bonds and the treasuries first.
Yeah.
Oh, okay.
Just a very quick note, because you were talking about them. One piece of information I'd like to share from my own experience. I mean, some people will know that I used to be a interest rate market maker for quite a few years, and I used to sit next to the bond guys, the bond traders, and the interesting thing was that the 10-year point, which is the bonds and the treasuries and gilts and all that, was driven like 80% by flows, not fundamentals, not sentiment, not anything. Obviously, it's driven by a lot of things, but 80% was about flows. So you can see on any particular day a big move in bonds or treasuries, and it might not make sense, but what used to happen was that there was a client who wanted to do a huge trade, 10-year swap trade, a few billion of that, and then the easiest and quickest hedge for the swap trader was to do bonds, because the spread between the swap spread used to be quite constant. So you can see, I had witnessed it many times, a swaps trader buying or selling bonds or treasuries, the market moving massively, and the bond traders next to him saying, what the hell is happening? And then they realize that the guy is actually moving their own market. So just something to keep in mind, that it does happen. And, the bonds and the treasuries specifically can move loads on these things, on these flows, without anything technical having happened or anything fundamental. So
that reversal from overnight it could have been just a big flow move, which is crazy out of nowhere.
Yes, I have seen that many times. Big move one day and then reversal or partial reversal the next day, and everybody's scratching their heads except the guy who's actually done the trade and knows why it happened. There you go.
I'm scratching my head today. That would be yes.
So it wasn't you buying or selling billions.
It was not me. Nope.
Me neither.
It was Kramer. Booyah.
Yeah, but it's in his dreams.
Steve, you could go ahead. I don't see Michael in the room yet.
Okay, we have things to show. First of all, we obviously have some reversals here in stocks.
And congratulations, Nostrovolgi, for gutting it out. I know it's premature.
It's too early, but definitely, all right. It's a good start. We tagged already the ascending channel support. Initial reaction was a rebound. I do believe that most probably it's gonna it's gonna fail the next time we tested that support. If you remember, I was talking about the plenty of resistances coming up. Also, the Nasdaq almost it came almost 20 handles, less than 20 handles actually away from the target I had there. The IWM, I'm guessing, is going to drop below this like flag pattern. The DAX, we expected one more push higher from there. That might have been enough. I mean, it satisfies, the move, and it's currently testing, the previous high and this low here. So the DAX is also at a critical level. But we do need to see some follow through from these moves. And the speculation is that these kind of moves start taking place because the PBOC governor warned about overnight, about a possible, as they call it, a Minsky moment, that excessive debt and credit growth in equity markets, in credit markets, can lead to bubbles. We've already been seeing that, and them bursting. Of course, he ended up saying that they think that China can actually manage through this kind of a situation and prevent it from taking place, etc., etc., etc. But only the fact that there was a discussion happening about that stirred the markets a little bit. That doesn't say much. Of course, we can keep pushing higher. Now, having to do with the Kiwi, Blake already covered it. I'm just going to cover. Here it is, actually penetrating through this channel. Obviously, the market is experienced enough to know that socialism is something that does not work. We've seen it over and over again. I'm Greek, so I can tell you as a fact, socialism doesn't work. Now, having to do with the yen pairs, on the other hand, we haven't had any real reversals. I mean, we had very, very, very nice rejections from critical levels in the yen pairs. So, for example, the USD yen is potentially in a triangle. The triangle's resistance did reject. The CAD yen that we were talking about yesterday did the exact same thing. So it got rejected from the bull flag resistance. So far, so good for anybody that wants to be short. Personally, I still believe that these pairs have a big potential to move to the upside, for at least one more leg higher. So I think that this postpones that momentarily. The euro yen did the exact same thing. As you see, that's what I was monitoring with the euro yen, this triangle. So we got rejected from the triangle's resistance. Obviously, my main scenario remains this, a push higher from there. So, we need to see how these are going to work. Now, having to do with the pound Kiwi, Blake already showed it, so not much to say here.
Just want to let you know that Michael is in the room. He just used a different username. So.
Okay, perfect. Pound Kiwi, as I've said many times, 189.50 to 190, huge area of resistance. Huge area of resistance, and the break above there, opens up much upside potential, much upside. On the other hand, though, and this is something that people should notice, while the pound Kiwi is breaking to new highs, the pound Aussie is triggering a head and shoulders formation. Okay, so I'm actively monitoring this market. I think it's quite interesting.
That tells you the Aussie New Zealand is going much higher.
Yeah, it's going to God. Yeah, exactly.
Right.
It's going. Yeah, indeed,
right.
Indeed, Blake. And I think we've had a very clear break from that. And as you said, I think that a bet on continuation, it's very, very, very likely. And since we don't have much time, I'll reiterate what I said in the weeks ahead preview. The dollar is still in no man's land. Blake said it as well. But since a lot of people are watching the CAD as the canary in the coal mine, if we go down to a 4-hour chart, my 4-hour charts are at another page, but you can see it here. The 124.30 support area, 124.30, 124.50, is also now the neckline of a head and shoulders formation. So in essence, if you want to see a strong dollar move, you definitely don't want this to happen. I mean, we don't want to see a daily close below 124.30 because that's going to be a major technical event for the USD CAD, and very often it does lead the USD pairs. So we have a lot more to talk. We'll do so tomorrow. Enjoy the interview, Dale. Thank you very much.
Thank you, buddy. Great S&P call. Hope it turns into Niagara Falls for you. So without further ado, Michael Storm, I'm going to make you the presenter. I'm very much looking forward to talking to you. Welcome to our community. So I should be able to hear your voice, see your screen.
How are you? Can you hear me?
Hi, Michael.
Hi.
So nice to meet you, buddy. Thank you so
nice
much for taking time out of a wild day to be with us.
Yeah, no problem at all. Yeah, thanks. I'm looking forward to it. I've heard good things about you from other people, so it's all good.
Oh,
can you guys hear me?
Good to know. I can hear you. Do you want to do a screen share so we could talk, or are we just going to do an audio? There we go. Okay, so Michael, I know that you want to talk about your trading methods, but what's interesting to people everyone has to start somewhere. And I believe I'm right in saying you've been doing this for about 17 years. Is that correct?
Yeah, that's right. Long time. Hey, by the way,
okay,
which screen is showing? Just curious.
I'm seeing your Euro daily, Swiss yen 5 minute,
Okay.
CAD
Right,
yen 15 minute.
yeah, I just threw up this little cheapy account here. So.
Okay.
So
what I'd like to know is, how did it begin for you? Who introduced you to the business? You know, what were you doing before? How did you get in? Who influenced you? Kind of like the beginning of your journey. Why don't you, it's always interesting to see how people ended up being traders. So what's your story?
Well, I mean, I wrote a little bit about that on a Twit Longer post actually yesterday. How I got started was I remember way back in like 1999, 2000 period, I saw some smart alecky looking kid that made $4 million in 1 year. He was on the cover of Forbes, and he was just smiling with this incredible smirk. And he was a SOS bandit, S-O.
Oh, yes.
Yeah. So
yeah.
they closed that loophole pretty quickly, but I mean, you know, I saw that and I'm like, my God, I just sit home and push buttons all day long and make millions. I'm like, yeah, you know, I'm hooked. So opened up my first account. Yeah. I mean, I threw like $70,000 in there, and I got a really cheap, you know, just a used laptop computer with one screen. I still remember the days. It was crazy. And I just started banging away like mad, you know, and all I had was tape reading skills. I mean, I read books on tape reading, about 3 or 4 of those, and I just sat there and watched level 2 in the tape and traded like crazy. So, you know, but it didn't go great. I mean, the first year was pretty wild. You know, I got to say, I mean, I would make like $10,000 one day, lose 15,000 the next, you know, make $7 grand one day, lose 9,000 the next, whatever. And you know, it was all over the place. I mean, some days I'd make you know, $3,000, then I'd lose $1 grand, and it just went haywire. It was up, down, all around, you know. And so I realized I needed help and I needed more, and so I ended up basically joining up with Greg Carpra and Oliver Velez of Pristine. Some people might remember them. They were pretty big about 17 years ago, and they split up, and so I left in 2006. But I was in their trade room that was run by Paul Lang.
I don't think they have such a great Velez has such a great reputation.
No, the reputation's pretty bad.
Wasn't that Pristine?
Yeah, it was. And there were some good traders, you know, in there. I mean, at the time, that was the go-to room. I mean, there was like 1,000 people in that room, and you quickly learned who was good, who was bad, and who not to listen to, and who to pay attention to. But I was there for 6 years and did very well.
So they're still around, everybody. Don't go there. All right, go ahead, buddy.
Don't go there. No, but he's got some good books, and some of the information is really good. And you know, I've well, anyway, since then, in 2006, I went to Forex, and obviously the stock market information would not work for the Forex market. So I ended up reading probably, I'm going to guess, around maybe 75 to 100 books, and I burned almost all of them in my fireplace, actually. But I did hold on to about 12, and I really liked those books, and I read them over and over and over again.
Name one.
Reminiscences of a Stock Operator.
Okay, yeah, Jesse. As long as you don't end your time on the planet the same way, I think it's an excellent book. Yeah.
I'm not about to go crazy and shoot myself. I'm a pretty happy guy. I got too much to live for.
I hear you.
So, yeah. So anyway, it took a few years. You know, the transitional period from 06 to 09, basically to 2010. It really took a while to figure out the Forex market. I mean, I was lost. You know, at least 3 or 4 years.
Most people I interview, Michael, say it was about 3-4 years before they had breakthroughs and they became proficient and consistent. Would you agree with that time frame? Kind of like an undergrad degree in trading?
Yeah, completely agree. Yes.
Okay.
But you know, the thing is, the longer that you sit in front of the charts, okay, the more that you can survive, the more you have a chance to thrive. And a lot of people give up before,
Like that.
you know, they give up before the breakthrough comes. You know, they want to get rich really fast. You know, if it doesn't happen in 6 months, like they enter and say, well, I'll give this a try, you know. And that's the wrong attitude. And a lot of people will just try it for 6 months, fail, blow out their account, fund it a couple times, blow it out a few times, and then they give up. You know, the spouse can't handle it. You know, kids can't handle it, whatever. And there's a lot of reasons.
Michael, let me ask you this, because, you know, I used to say you don't lose till you quit. But isn't it possible that some people just don't, no matter how long they stuck with it, they just don't have the right temperament? And if it's really a negative influence on their life, it's okay to let go?
Yes, it is. It's not for everybody, and it can become very addicting. I think a lot of people have a gambler mentality. They just really don't have the proper mindset, the proper discipline, the patience to wait for the trade setup to come to them, and the ability to see it, not just the knowledge. I mean, knowledge is one thing, but wisdom is something entirely different, you know.
How about psychology? You could be a great analyst and make great calls, but that's much easier than executing it when you have money on the line.
Right, exactly. You have to put money on the line. And the problem I think a lot of people face is they adopt this mentality of go big or go home. And, you know, they'll put everything in their account on one trade, or maybe half their account value on one trade.
I've done it.
I won't do that. It's crazy. I don't want to.
Yeah, don't go to pristine, and don't do that.
Exactly.
All right, go ahead, buddy.
So I guess the biggest things I found in the last 7 years, okay, and just really boiling it down and coming to the culmination of what I've finally grown towards, because let's face it, we're all on a journey as traders, and we're growing towards being a self-sufficient trader that has their own system, their own knowledge, their own wisdom, their own understanding. What I've gotten, especially in these last few years, is to trade incredibly small relative to account value. And most people will laugh at that and say, oh, that's ridiculous. You know, it's not even worth my time, you know, to put a mini lot on a trade. But for me, I have no problem with that. I mean, I've got an 8-monitor array, and I'm sitting in front of it, and I've got like 30-something charts up. And I basically kick back in a very relaxed environment, just drinking coffee and, you know, eating bacon and eggs and just watching the charts. And I basically come into the market saying, I don't really want to trade. I don't want to push any buttons today, unless something jumps out and grabs me by the throat and, you know, slaps me around and wakes me up. And
yeah, you don't really have to hunt for a trade. I've talked about that, Michael. It's a great point that you make. The good ones are so compelling you can't avoid them. But if you're going from instrument to instrument and you have this in your head, I've got to find a trade, you need to turn your platform on.
Yeah, you don't want to be desperate, that's for sure, you know, and you don't want to be scared either. And a lot of people trade so large, it scares them. They have the trouble, you know, pulling the trigger. It's a fear for pulling the trigger.
Use Less Leverage was a breakthrough for you, and it's a song I wrote. But go ahead, buddy. Yeah, go ahead.
Once. It's pretty
you heard that before?
Yeah, I did hear you say that. I like that. That's pretty bold of you. Yeah. So, you know, what I do now is I basically I put my trades into 3 different groups. All right. I look at scalp trades on, you know, 1 to 5 minute charts. I'll look at intraday position trades on 15-minute charts or 1-hour charts, and I'm looking for, you know, a swing, something to swing up for a couple of hours or down for a few hours. And then I'll do different trades, like on 1 hour, 4 hour, and daily. They'll actually become, you know, swing trades, holds that I'll hold for days on end, you know. So
do you start short term and move to longer term time frames, or do you start at longer term time frames and drill down?
Oh, always start longer term time frames and drill down, definitely.
Okay, buddy.
So, and then in addition to that, I'll group my trades into 3 other areas, like high confidence, low confidence, medium confidence. And if I don't have too much confidence, but I see a 5-minute buy set up on something, I might say, you know, well, okay, I'll throw 0.05 or 0.1 or, you know, something like that. If it's a medium confidence trade, I might do like a 0.2. And if it's a high confidence trade, I'll do maybe like a 0.3. And if it's insane confidence trade, like it's just one of those trades that reaches right out of the screen and slaps you all over the face and says, "Oh, here I am, come and take me," you know, I'll put on like a half a lot or something, and then I'll often use the stop. I'll institute a stop loss at that point.
Okay.
You know.
All right.
So like for instance, I mean, I don't want to just shoot around because you probably have questions, but I'll show you.
I do. You know, just whatever's on your radar and whatever you want to talk about. It's still a free country for a while. So yeah, you know, maybe you could talk about what you have on the screen. I see that you use stochastics and looks like some moving averages. Is that correct? And then also looks like you also know harmonics.
A little bit.
I see a couple. Yeah, I'm an amateur at everything. So why don't you tell us why and how you use what's on your screen?
Sure, no problem. So basically what I'm looking for when I drill down, okay, is I start off with a daily chart and or I'll go monthly and weekly, and then I'll look at the daily because the daily is the one I focus on the most. Okay. So the other day I saw this, it was just an incredible move. You know, I look at this like basically at 3 drives. You know, we had 1, 2, 3.
You like that too, huh? Where did you learn that?
You know, I really can't remember. But
right.
Yeah, I like seeing something that's in a 3 drive mode, and I like to see its completion. And I saw this daily sell here, and I can't remember if I shorted this or not, but you know, I basically waited until it came right back here into the moving averages. And when I saw the 55 DMA getting touched, along with this 40.
Which chart? Or can you put your cursor up on that chart?
Yeah, I do have my cursor up right now. I don't know if you can see it or not.
I can.
No?
All right, so which chart are you talking about then?
Can you see this chart or no? I have the US dollar ZAR up right now on full screen. Big.
No, I'm still showing that mixed screen with 6 different charts here right now. The original one.
My screen sharing went down. How do I do that again? How do I restart? I'm no expert at GoTo.
Okay, so you just click the screen share option above there. Steve, help me if I'm not giving him good instructions. But you should be able to reshare your screen. Or is it working for you?
Just up now, there's a big tank doing around regarding the ECB.
Uh-oh. I got the news guy. Hold on a second here. Let me find him.
Does not sell.
Is it working now?
We're still looking at your original screen.
Wow, that's beat. That really stinks.
I hate when this happens.
Yeah, I've got the button here that says show screen. I'm hitting pause.
Maybe you're not showing. Do you have a lot of screens?
Hey Dale, this is Blake. I think you might want to take over the screen and then pass it back over to him. See if that works.
Okay, thank you, Blake.
Right.
I'm going to take over.
And good morning, by the way.
Good morning. Yeah.
I'll show my screen.
Try that again.
And now I'm going to go back to Robinhood.
Yeah, I'm no expert at GoToMeeting. I used Omnovia for like 6 years, so I don't know.
You should have seen me my first day at GoToMeeting. All right, so you're up again, and it's still the same screen.
No.
There's an icon on your control that if you can click and select which screen that you're presenting, because right now we can see the original one with the Euro Yen, Swiss Yen, Canadian Yen, and the 6 other pairs. So
so you have to select another screen unless you have it on the. There we go. Beautiful, Michael. See, that's why you're a trader, is because you're persistent. Okay, so now we see USD ZAR up there.
Okay. All right.
Thank you.
Pardon me. So yeah. So anyway, the US dollar ZAR daily. I saw this 3 drive.
Yeah.
And then I waited for it for a bunch of days, you know, to come down. And when I saw it hit the 55 DMA, which is the green line, and the 40 period, simple, this is all simple right here. I was thinking, you know, this is an incredible fall. I mean, 4 days down, really huge. I saw, you know, the stochastics basically buried. I looked underneath, and I saw the 200 and the 100 all coming up. And I look at these wicks over here and, you know, the candle bodies, very visual, you know. And so I just figured, I'm just going to buy this. And so I did. And
Did you wait for the first green candle to tell you that the break had lost momentum?
Well, on the lower time frames, yeah, I mean, I'm trying to remember exactly where. It was somewhere down in here. It was more anticipatory. You know, I might have bought over here, or maybe I bought somewhere over here. Not sure. But I just bought it and held it and waited, and it went up 2,500 pips, and then I got out. So, you know, that was a good one. So I'm basically looking for stuff to go to areas, you know, price points that make sense, you know, to me. I don't really want to buy or sell anything unless it really makes sense. It's completely out of line, you know. As a, for instance,
what are you looking at today with pretty big reversals overnight in S&Ps and bonds and yen and gold? I'm curious what your view is with what's happening right now. What's on your radar that you're considering that you haven't done yet?
Well, that I haven't done yet. I mean, I've just done it. So.
Okay, beautiful. That's just as good.
Yeah. I'm actually long. I'm long New Zealand yen. I'm currently long New Zealand Canada and New Zealand Swissy. And the reason for this, which I'll, you know, just explain, I'm not looking for the world. I'm not looking to, you know, I'm not looking for a home run. Okay. No, I'm not looking for a home run. I'm just looking for a single or a double. I'm just looking for this right here. I see a maximum daily range bar that is crazy huge. I mean, it's eating up 1, 2, 3, 4, 5, 6 days, right? 6 days and more.
Engulfing. Yeah.
Yeah, and then you see all this support way back here. Okay, so I like this. This is out of control. It's too far. So I look at the 4 hour, and I know that what goes down is going to bounce, and what bounces is, you know, goes up really high, like over here, is going to fall.
So would you look for kind of like a retracement of that big decline that we recently had, you know, halfway back? Do you use fibs, or maybe back towards your confluence of moving averages would be enough for you?
Yeah, exactly. I mean, right now you have an oversold condition that's out of this world, and it's across every pair. So I see the stochastics buried on the 4 hour and the 1 hour, and I might be early. You know, like I said, I'm trading so small. Oops, what did I do? Okay, I dragged it by accident. I'm trading so small that I really don't care. It's not going to affect me if this trade goes against me. Not on this, because this is a different platform that I have up, but on my real account, I've got right now 0.1. On a 50K account, I've got 0.1 put out there. Okay.
Yeah,
so
I wasn't gonna ask you because, you know, I'm not your accountant or wife, and it's none of our business. But yeah, you really use less leverage to heart.
Well, I'm telling you what I mean by trade small. I mean, I got 50K, I got 500 to 1, and I'm at 0.10. I mean, you got to be kidding me. It's laughable. So if this does not work right here, if I have guessed incorrectly, and it comes on down lower and lower, I mean, I'm basically going to be dragging these lines down, and what I'm looking for is an eventual 1 hour buy or 4 hour buy, and I'm looking for a mild retracement. And at this point here, you know, I see this little spot that put in an hourly buy candle, but it failed. So there's going to be people wanting to get out there. They're holding on, they're doubling up or whatever, and they're just waiting for a small retracement just to get out because they're not.
Yeah, so you look for some mean reversions after extreme moves as one of your styles.
It's one of them, yeah.
Yeah, okay.
And, you know, another key thing is, you probably read the book by Douglas where he said, we know nothing for sure, and we don't have to in order to make money.
Right.
Remember Mark Douglas? You know, trading
in the zone.
Yeah, trading in the zone. We know nothing
Yeah.
for sure. We don't have to in order to make money. And that's the truth. I don't know anything, really. The reality is, I don't know if it's going to stop here. And I don't know if it's going to bounce to the 382 fib, if it'll bounce to the 50. I don't know anything, you know.
So let me ask you this: about 7 years ago, I bet you thought you knew everything, and now you know nothing.
Well,
right?
Kind of, yeah. Somewhere between 7 and 5 years ago, you know, I looked at stuff and I thought that I could pinpoint exactly where something was going to go. You know, exactly where the bottom would be or the top, and you know where it would go to. And it's just
because then it would happen once in a while. Because it would happen once in a while, but it was the exception, not the rule.
Yeah, very often wrong. No, yeah. So the thing is I can't tell the market what to do, and I can't really pinpoint exactly where something's going to go. So I'm just looking to take a pocket, you know, a pocket of movement. You know, if I can only get 50 pips out of a 100 pip move, and I exited because I saw a 15-minute sell, and I was like, oh boy, I'm not going to watch all my pips evaporate, and then it turns around and shoots up 100 pips. You know, what did I do? I mean, I got out early. You know, I only got 50 out of a 100 pip move. I can't cry over that. I'm just got to be happy, you know, and realize
that's a great attitude. That's a great, because I know a lot of people, Michael, you know, they go, oh, you know, my target was higher, I got out. Do you ever take partials just in case something like that happened?
Yeah, absolutely. Okay. A lot of times I will see a trade go, and it'll move up or down, you know, beautifully. I'll see I have like 75 or 80 pips or something, you know, first thing in the morning. I might wake up and find that. I'll often take half off, and then I'll set an in the money stop underneath some candle or above some candle, you know, and I'll let it run and see what happens on the rest. And half the time I'll get stopped out for a profit, and the other half the time it'll go much further than I ever thought, and I'll chase my stop loss down, you know.
Yes.
Like if I was short this, which I was not, I wish I was, but if I was, every hour I would have been pulling my stop loss down. I don't know if you can still see my chart.
Yes, we can.
Okay, so right here, this hourly candle, if I was short, oops, that would have caused me to bail on probably 50 to 80% of my trade. I would have taken it off. You know, if I had, like, let's say 0.2, I might have taken 0.15 off of the table here, and then, you know, set a stop like right up, I can't get this to drag, right up here.
So you're a believer in trailing stops as well?
Yeah, but manually, you know, I don't just let the computer do it. So then every hour that goes by, you know, you just keep chasing it down. I mean, eventually it's going to get an hourly buy signal, and you're going to get knocked out, you know.
So Michael, is there anything else important that you'd like to share? We're, you know, coming up, you know, there's really no time limit, but if someone came to you, Mike, and said, what's the most important piece of advice you could give me, Michael? I'm considering becoming a trader. What would you tell them?
Well, right off the bat, I would say to read the first 5 books on psychology, trading psychology. If you can master that and master the emotions of fear and greed, you're going to be okay. I think trading is 80% psychology. It's understanding what other market participants are going through, what they're feeling, their emotions, their thoughts, and how much pain they're in or how much greed they're in. And so I don't think we really trade the charts as much as we trade people and people's emotions of fear and greed.
Great advice, Michael.
You can master those emotions and control yourself so that you're not freaking out in fear, or if you're not, you know, elated with greed and wanting, you know, a lot of people, it just kills me to hear some people say, I was up like 500 pips and then I gave it all back and let it go into a loss. I mean, that to me, whoa, that is insane.
Yeah.
You know, if you're up 500 pips, you better be taking half or 3/4 of your trade off and adjusting your stops. Who would ever want to see that go back? I mean, that's just greed of the highest level.
Well, it's not money. There's no money management. So to me, money management is part of the psychology, taking half takes the heat off, you get paid, and you have no risk on a trade. So this was this was a great interview, Michael. I'm so glad I reached out to you on Twitter.
Well, thanks. I'll keep going if you want me to, but
Yeah, go ahead.
So
go ahead, buddy.
So that's the first thing right there is the psychology. The second thing is the knowledge. You know, you've got to gain chart knowledge, knowledge of price action and how the candles are, you know, the candles are working and what's happening. You know, knowledge about market makers, for instance, where their stop runs occur. You know, if you look at the New Zealand yen, you can just clearly see somebody got stopped out up here before it crashed.
Yeah.
So that's, you know, that's a big piece of information. So knowledge goes together with wisdom, and then you just have to survive. You've in order to thrive, you have to survive, and the only way to survive is to trade really, really small and be very, very patient and focused. You know, this is, I sound like a broken record to people a lot because I preach the same thing over and over and over again, to be focused and patient and very disciplined. And those things, you know, they sound like just words, but they're really very powerful. I mean, you got to look at what's behind that. You know, focus is a lot more than just sitting down and, you know, watching charts while you're reading your emails and playing on Facebook and, you know, all the other things you could be doing. Yeah, exactly. I mean, focus is, I mean, 100% all in, all distractions cut off, you know, phone turned off, TV's off. I mean, you're literally planted and staring at the charts and calculating and thinking and watching the price movement and the flow.
Michael, do you have some type of business model or no axe to grind at this time and just trading your own money?
Oh no, just my own money. I don't have any, I'm not teaching. I don't have you know, I don't have any kind of website or anything. You know, I don't have a course to sell, nothing. I'm not into that anymore. I've already done that. I've been there, done that. Don't want it for anything in the world.
Why?
It's a lot of work teaching people. You know, I've probably taught like 1,400 and something people to trade in about 6 years. And you know, it's just a tremendous amount of work to teach the newbie trader, and you pour all your energy in and all your time. And I mean, sometimes I would even give them free hours on Saturdays, like, you know, one-on-one. I mean, we'd sit there for hours on a Saturday and just go over stuff, and it got pretty tiring. It takes a lot of energy away. And I get the same old questions, you know, the same questions all the time, you know, what's my entry, what's my stop, you know, this, that, and the other. And you know, it gets tiring, and I don't want to, you know, I just don't want to go there anymore. So, yeah.
Well, I'll tell you what, buddy, I'm happy to call you my trading warrior brother. I don't know if you noticed, that's what I call people that I feel are kindred spirits with me. Yeah. I really like your attitude of being Robin Hood, where you're taking from the algos and giving to the everyman. And really was a pleasure meeting you. And what an excellent presentation on market psychology. So looking for Kiwi yen to pop for you for at least 50 pips, and that pips rain down on you for the rest of your trading career, my friend.
Oh, thank you very much, Dale. Appreciate it. And yes, and you as well. I hope you have a great trading day.
Thank you, Michael. Everyone, thank Michael Storm. You can follow him on Twitter at Forex spelled out Bandits. At Forex Bandits, he has nothing to sell you. Sorry. No, and I think it was a great session, everybody. Remember, the S&Ps have to close under that 2546 level by tomorrow. They have a 2-week reversal, and we'll wrap it up tomorrow. And you know how I end every show, and I'm going to even tell it to my trading warrior, Michael. Don't just count your pips, count your blessings, and we'll see everyone to wrap up the week tomorrow. Thanks again, Mike.
Awesome. Thanks, Dale.
Adios.